The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We start the day as usual, looking at the German DAX and the FTSE. And as you can see, these markets are not responding like we are here in the United States. They're actually down on the day, which is rather unusual, but these are different countries, so we've got to remember that. Main thing in the news today, of course, Larry Ellison, I guess, wins the TikTok bid. Larry has a home here in Tucson, Arizona, right up about 8 or 10. Well, it's about a mile and a half from where I live, up in he's up in the real foothills of the mountains. He has a 20,000 square foot home there, folks, that he has never been in. And it's never been occupied, and it's still that way. We happen to know the people that take care of it, but it's just one of the many homes that he has. But congratulations for him winning the TikTok bid, whatever that happens to be. Okay, let's talk about something very, very near to our hearts, and that is this. Hold on one second here, and I'll get it up here so we can look at it because it was frustrating as heck. Let's get up here and where are we? Oops, just a second here. I thought I had it up here, but by golly, it doesn't look like I did. Then we'll get to the S&P here close enough, but I wanted to talk here just a little bit about the, hold on one second, folks. It's in the futures section. There it is. Get it up here. Here's the natural gas. You talk about frustration, folks. We bought the natural gas at 2:30 on Friday. I had a stop at 225. The low was 224.90. So we got stopped out right on the low tick. And then tonight, last night, it gapped up and it's up $1,300. And someone's asked, how do you respond to this? And I don't have a response to it because I can't chase the market early on a Sunday night. I saw that it opened $5, almost $6 higher. But by the time you saw that, it was already up $9. So, I mean, it was moving very, very fast. There was nothing you could do about it. The pattern was right. Everything was right except one thing, and I had to stop a little bit too close. But that's the threshold that I like to look at is $500. And so that's what happened. Nothing we can do about it. I know several people had their stops a little bit lower than that. They actually bought it at 228 and 229 because it traded under the that level several times during the morning, and so that's where they put their buys in. But that's neither here nor there. That's what happens when you get stopped out of something. You have to just move on to the next one. So the way I handle this is I will wait to see a nice ABCD on a 30-minute chart. And if it gives me a nice buy at that level, I'll give it another chance because I still think the pattern is there. It's certainly, good for you, Bob A. I think that's terrific. I know several people had their stops a little lower. What that says, it's very bullish, Bob. That's all I can tell you. This is a very, very bullish chart. That's why I talked about it so much. And I know just by talking about it so much, it absorbs so much energy that, there's really nothing you can do about it. That's all part of trading. Sometimes it's some days it's chicken salad, and some days it's something. The old adage is it's either chicken salad or chicken poop. It depends on how you mix it. So this one happens to be. We'll wait and see what's going on. But we've got a couple of markets here that I think deserve a little bit of our attention today because we had a day coming in here today where we had a possibility of having an up day. And the reason for that is if you look at one of the number one stocks in the business, which is Apple, you'll see here Friday we went down and we completed a beautiful ABCD pattern here. We took out the lows of the week on September the 4th. You'll see that right before the close. That was at around 110 and change. and now we're only up about $1.13, 113 today, 114. So it's not really moving very much, but that gave you the first indication that there was most probably going to be an up day today. I don't think it changes the bearish scenario in the Nasdaq at all, but these are just patterns, and I'm just looking at them to see how they're going to react. Here's the S&P here last night, folks. You'll see that we made the double bottom. Here was another reason why we had a pretty strong feeling that we were going to be open to higher this week or this Sunday night, because of that fact that we made that double bottom down there. Now the Nasdaq actually took out the lows of September the 8th, and still reversed, and it was up like 160, I believe, at some time last night. But we're having huge swings here. Now, if you'll look at that S&P chart that we have there, you notice that the 382, the first 382 retracement came in on the 4th. You'll notice where it says 0.37, that's basically 0.382, and the market had rallied 60 handles off of that low, and from there we went down and made the ABCD pattern down there at the 3,300 level, and the low being 32.95, which we made twice on Friday, once on the 8th, and again on the 11th. So the key levels to watch today are the 33.95 level. If we get above that, that means we're going to have a pretty good rally. But all we're doing now, folks, is backing and filling in a bear market. Hey, that's my 2 cents worth. I mean, I know these swings are humongous, but that's what it's looking like, as I look at the charts. And I'm just looking at the charts. I know there's a lot of news out there about government stuff and all the other stuff that's out there, but I'm just looking at the charts, and it's giving me an idea of where we are, because we had a 10% break in the Nasdaq. It was the biggest break we've ever had in the shortest period of time, so that does mean something, folks. You have to pay close attention to that, because it's very, very important. Now, I do want to talk just a second here. Oh, by the way, we will have Rich Anderson as our guest here. At the half-hour break, he'll be talking to us about some of the things that are happening in Minneapolis and also the grain markets, because we had that very bullish bean and corn report that came in on Thursday that made the markets look pretty good. It was actually Friday. And, of course, Mr. Z is very, very happy today, as he always is. He's always happy in good days and bad. But let's take a look here at a chart that someone sent us. It shows the Nasdaq. This is the worst week in the Nasdaq since March, okay? But historically, this has been the worst 2 weeks ever in the Nasdaq. But you can see here where we are here. We're not down anywhere near where we were in March. So that's actually a good sign. The fact that this economy has held up, given the fact that everything in the world has happened to it, is just really amazing. I know the Federal Reserve has been, adding stuff as they've always been, but they started doing that back in 2009 with Helicopter Ben. So nothing's really changed there. I mean, we hear this from Shane Smolian all the time about the Fed juice that comes into the market, and it's certainly there. But we're looking at this market here today. We're down 2 weeks, and we're due for a little bottom. And this might be it. It may not be it. I don't know. But you know what, folks? Nobody else does either. We'll be right back, folks. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've plotted the chart of the E-mini S&P on a 15-minute basis so you could see what I look at, 4-minute basis on Sunday night. You'll notice the market gapped up sharply. I think we gapped up about 10 or 15 points, and then, of course, we went to be as high as 40 higher. You can see the ABCD structure there. But the only reason I watch these, folks, is because, sometime during the night you might find a nice pattern. And if you'll notice, you had a beautiful ABCD pattern up there at the top. I mean, it was, perfectly symmetrical. And there at that point, you don't have to risk very much. It was trading at 33.74. The high was 33.74.75, I believe, or something like that. Then you came down and you rallied up to a 61% retracement, and I think you're in that same type of a ballpark. So that's what I'm doing, is I'm just looking at that chart. The reason why I use a 4-minute chart is, I know it's a little obscure, but the Earth moves 1 degree every 4 minutes, and so I use 4 minutes just to do something different from a 5-minute chart. But actually, the difference between a 5-minute chart and the 4-minute chart is actually it doesn't make any difference which one you use. That's for sure. Now, I know we're going to wait and talk about the grains with Rich when he comes on a little bit, but I wanted to talk just a tiny bit here about Dr. Copper, folks. There's another reason why it's pretty hard to be bearish, even though we've had that big drop in the NASDAQ. Look what's happened to the price of copper, folks. We're still up at the 78% level. We've been here now for 3 weeks, this level of 305. That's been a tremendous bottom off of the March 23rd low when the whole rest of the world bottomed. And so we are at a very, very critical level here in this copper, but it just hasn't broken. 2 weeks ago, we got down as low as 296, and we came back at 10 cents a pound very, very quickly. So this is not a bearish pattern here, folks. So it's into some resistance, but that's all it has. It's nothing resistant. It's truly amazing how the economy is holding up. And when you stop and think how much money the Fed has put into this thing, it's not that amazing. So that's the same thing happened in 2009. When helicopter band brought in quantitative easing, and that, continued on for, years and years. And so we'll just have to wait and see whether these markets move. But we've had some tremendous moves in the futures markets, folks, that we've been talking about here for quite a while. And one of the ones that we've been looking at, of course, has been the hogs. And we owe this to our good friend, Mr. Z, and also to Rich Anderson for bringing it to our attention. I was just bringing the charts up. This last little 382 retracement we had back here on September the 1st, we rallied from 53, and we rallied $17 a pound in hogs. And this is going to be an indication that we are going to have higher beef and higher pork and higher chicken prices coming down the road. The reason why chicken prices will be higher is the fact that, they eat the soybean meal, and soybean meal has been going up with the soybeans, which have exploded to the upside too, which is pretty much what we've been watching. Now, let's just get this one up so we can take a quick look at it here. I'll do the daily first, and then I'll do the smaller one next, because it gives you an idea of what we were watching here Friday when Mr. Z was asking us about what we thought the price might be in these soybeans coming into this report that we had. And I believe what we talked to him about was the fact that we could be looking at a market that would be probably approaching the $10 level. That's the area that we were watching very, very closely. The high last night, we got as high as, I believe, 1008. We're now trading at around 996 from what I understand from the cheap seats here in Tucson. But you can see the ABCD patterns that were there. The last one we had was a 78% level down there at 865. That's when the meal was down there making a double bottom. We talked about that several times here. And, of course, the meal had a heck of a run. And we were able to get into the soybean oil, which was very nice to us. But as you'll notice on this one here, that we've had several straight-up moves, and each of the retracements were equal to a 382 retracement. Again, another reason why you want to watch that 382 retracement, because it does give you an idea of when the trend is starting to move in a very, very fast fashion, and that's what you like to see sometimes looking at. Someone's asked a question this morning about the gold. I personally believe the gold is going to have some resistance up here at the 1965 to 1968 level. That's a 78% retracement. The silver's not moving nearly as much as the gold, so that's backing off a little bit. And platinum's hardly moving at all. I mean, it's up a little bit, but it's not moving nearly as fast as the gold market. So the gold is the one you want to watch today, and that key level, I believe, is at 1965. Someone's asked a question, will the market top this morning? I wish the heck I knew that, but I don't know that. I'm just waiting to see whether a pattern lines up, and we're going to be able to see whether it's going to line up or not. And that, I don't know the answer to that, but nobody else does either, folks. That's why you're a technician, is because you're trying to get market feedback from what's supposed to be going on. And that's the key thing. Remember, folks, we're down a lot in the NASDAQ. I mean, we came down more than we've ever come down before in a faster period of time. Historically, that has to mean something, folks. I mean, even though we had, Apple and Google and, all the others, Tesla, it's still basically a market of stocks. And when these things start to sell off, you've got to be really, really careful. And these FANG stocks, some of them have really gotten hammered pretty bad. As you can see, I think one of the Apple has, Apple split, of course, but that hasn't got hurt very bad. But Amazon hasn't gotten hurt very bad. This is just nothing more. If you look at Amazon on a chart here, this is nothing more than a 7-day correction. And if you go through all of the FANG stocks that we put in the newsletter each week, you'll see that each of these is just one or the other. Now, the only one that looks really bad among the FANG stocks is our favorite, of course, as a joke, is the Netflix. And you can see here we had a potential double top up there. There's the big ABCD at, the 586 area. The high was 572. And, of course, what they came out with their blockbuster Academy Award-winning movie this weekend, Cuties, which I think everybody should watch. It's a real great educational film to show you how far we've come here in the United States, folks, And it's just absolute, it equals Grease. I mean, that's how good it was. I mean, it's just absolutely spectacular film. I bought it for all my friends that have little children because I think they're going to really enjoy that film. It gives it very, very importance philosophically. And I don't know why you're laughing, Marshall. How's the fires up there, buddy? Are you safe up there in the fire section? Because my friend in Oregon is certainly not safe. He's having a lot of trouble in the middle of Oregon, up in there in Tiller, Oregon. But it's not very good. But I hope the fire's okay. I know you're on the river, so that helps a little bit. But that the northwestern United States is really getting hit bad. Yeah, there's smoke everywhere. If you've seen San Francisco, my goodness, that doesn't look very nice at all. But the same thing as San Luis Obispo, folks. I mean, they've got lots of fires in there. It's very smoky, 100-degree temperature, hard to believe. Hey, stay tuned for Rich Anderson, folks, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line. Rich, how you doing this morning?
Doing great, Larry. Doing great. Beautiful day in Eden Prairie, Minnesota.
How's the smoke situation up there? Do you have any fires at all? You're too far north, aren't you, to have any fires?
Yeah, Yeah, plus it rains. I mean, it's been like Florida weather. Rains practically every day for the last week. It's finally going to get one warm day here today. So it got cold, and now it's warming back up. But it was rainy, so we don't have any dryness like they do out there.
Okay, we have a question from one of our listeners. How is the situation as far as the police force there in Minneapolis? Any news?
Well, I mean, it's just these young millennials that think you don't need police. The black community understands that you need police. All the rest of us understand that you need police. But you got some of these really liberal young white kids that are off the rails, frankly.
Mm-hmm. Yeah, it's pretty tough. Rich, tell us about the grain report. We had soybeans tick off like a rocket up 20-some cents. Is this rally going to continue? I mean, even we've got corn moving sharply higher Friday. So what's your feeling here?
Right. Well, I mean, it was pretty much as expected. But as an example, the Chinese have booked 5 million metric tons of corn over the last 4 weeks from us. And they've done another 5 million from Brazil. But the funds have added 20 million metric tons. I'm not so sure that we can keep this pace of buying up. And the truism is that during harvest, that is when you have the most available supply of cash of corn and beans or wheat, whatever, it's during harvest, because some of it has to be sold because nobody has enough storage for everything. So we're getting close to that harvest, which will be in the next 4 to 6 weeks. Corn and beans will be harvested like crazy. So I would expect that there would be some slowdown and hesitation. And then you could always have a curveball. If all of a sudden the Chinese decide, well, maybe it's gone up enough, we'll cancel some of these sales. They're traders too. Don't forget that. And then today we have the TikTok deal, which, the president said we have to have this sold by the Chinese by today. The Chinese are now saying, well, we'll sell it, but no artificial intelligence. I mean, very confusing stuff. You got a lot of cross currents, but the report, most important thing a guy can know is that when there's a report, how does the market close after the report? It's not what was expected. All these numbers and stuff. That's why fundamentalists, I have a hard time with that in this day and age. You just go with what the markets are telling you. But we're going to come into a period of time where there's going to be more cash available. The cash traders have been scrambling to get commitments for the Gulf, which is where they're exporting all this grain to China, and they want to get it done. We have lots of cross currents. We got the Fed meets on Tuesday and Wednesday, and if they give us some very particulars on the interest rates, which basically they're implying lower for longer, that's got to help gold. Commodities in general, the ETFs and commodities, which are what the brokerage firm industry did because they realized they don't have enough futures licenses, and this way anybody can be involved in commodities. It's the ETFs. The ETFs have grown from $95 billion in 2015 to $290 billion today. Now, a lot of that's in the precious metals. The oil markets, actually, if you look at commitment of traders, there's been a reduction in the managed money. The producers, the buy side of the ledger has been reduced, averaged about 8% since 2005. It's now down to about 5%. So they're not that friendly to energies, but ETFs are growing, and that was just the answer for Wall Street. We won't need as many commodity brokers because we'll just have ETFs. Then you don't have all the restrictions that you're qualified, to be an investor, to be able to take risks, to use leverage, because you're doing it with an ETF, which not all ETFs are created equal, and you have to read the prospectus because, believe me, some of them aren't that good. And then we've got the bonds. We're doing bonds this week. We're selling bonds on Thursday. We're selling tips. Interest rate, they're probably going to be taken up because we're the safe haven of the world. And Congress gets back in session, and if all of a sudden these guys decide that everybody seems to be on the same page, we'll have a continuing resolution so we don't close down the government on October 1st. If all of a sudden somebody decides to make noise that, well, maybe we will close down the government, which would be a bad idea for everybody and anybody, that could cause a shake in the market also.
Yeah. Well, it's certainly having volatility, aren't we, my friend?
Yeah.
Rich,
Go ahead.
I want to discuss a little bit because we've seen the brokerage firms increase the margin requirements in gold and silver, and even the grains. But has this? How much of an effect does this have on volume and stuff when the margins increase by triple like we've seen in the gold and silver?
Well, for you or I, it has and any futures trader, it has an impact. But for the ETF community, there's no leverage, so it doesn't affect them. It only affects the leverage players, and that's the beauty of the ETFs are always, on the buy side, basically. In fact, in the old days, Goldman Sachs index was one of the first ones, and they would buy X number of futures, and then you'd have the Goldman Sachs roll every 2 or 3 months, depending on the commodity. But there's so much cash out there, and I don't think it has other than for small speculators, it has very little impact because these are asset allocators today. They're dealing with billions of dollars, and they're maybe doing 2 or 3 or 4% into commodities. So I don't think it has a lot of effect other than on the small guys, less than seven-figure accounts.
Rich, a couple months ago when hogs were trading down around 48 cents or so, 47 cents, in the October, you were talking about the possibility that China would be coming in here to buy hogs pretty soon because they were running out of hogs. And now we've got it 20 cents higher, up around 69 cents. What's your feeling here in hogs now? We've had a tremendous move in the last 2 weeks. We've gone from basically 53 to 68, with basically unabated. What do you think is going to happen now to hogs and the price of pork, too?
Well, one of China's major importers that they import hogs from is Germany, and Germany has found Asian swine flu. So China, along with a lot of other countries, has said, well, we're not going to be importing from Germany. They said that over the weekend. China depopulated over 300 million hogs to control their Asian swine flu. They're now repopulating that. That's why they need all this corn and beans. They didn't need it this past year. They're going to need it coming up because they're going to have all these pigs to feed again. That's the population of our hogs in this country. But it's the Asian swine flu thing that popped up in Germany. They have to come here. And believe me, we've been killing hogs. We got behind in our kills because of the COVID and the plants shut down. Now we're killing 6 to 10 over a year ago. We're getting caught up.
Well, hey, stay with us, Rich. We got a few more things we want to cover and a few questions from our friends. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're chatting with Rich Anderson. Rich, I posted a chart of the Christmas wheat up there, and boy, that's got a very bullish pattern. It has that 20-minute line down here at the 542 level, and it hasn't reacted at all, to the other grain reports. What's your feeling here on wheat? Does it have a chance?
Well, I think it has a chance, but right now the profitability in the Gulf is to ship corn and beans, and that's, those are the big programs that are going on, and so that there hasn't been much activity in the wheat. But, I think it has a chance. And once the coverage, from the harvest for the corn and beans starts, and they won't have to be paying up so much, then I think wheat will become more of a player. But in the report on Friday, they increased the world wheat production, and that's the other thing that's putting pressure on the market. But by the way, besides China, the other countries that are not buying pork from Germany are South Korea and Japan, and they're big purchasers, and the German pork is almost twice our price anyway. If you just look back at the chart, I know this is a technical program, we did leave a gap on September 3rd, and if you're a cash trader, you'd notice that the futures went premium to the cash hog on September 3rd. So there was lots of technical reasons for that. And who knows how many hogs were, when we had the COVID, the packing plants were closed, they were euthanizing hogs. So there's lots of interesting things going on there. But the wheat's tied up indirectly from the corn and beans, although the crop report on Friday, the world production was increased.
Okay, that's interesting. We have another question for one of our listeners, and the weather that's going on with the Hurricane Sally and stuff, the stuff that's going on in the Gulf will affect the products moving out.
It's likely to back them up and slow it down. You have, the offshore oil production rigs are all being closed down for Sally. So, you don't send your ships out, you load it, they're less stable. So very much so, but that's a very temporary thing, maybe a week to 10-day kind of a deal. It shouldn't have any major impact. But then the follow-up on that is that moisture that comes as it moves up north, into the corn and bean area during harvest, that can make a really messy harvest and cause some temporary shortages of the grain that's going to come at harvest time. That'll be a slight negative. There's always these cross currents. That's why you look at the charts, Larry, because you never, unless you're really, really sophisticated fundamentalists, you never know which of these fundamentals the market is looking at. The market will tell you, like the gap on September 3rd on these hogs. The market will tell you.
That's for sure.
Look at the charts. Trade what you see, not what you think.
Hey, good. I like that. That's very good. That's very good. I think that's interesting. Did you think of that yourself? Hey, listen.
No, I learned it from somebody.
Yeah. No, this was the anniversary weekend of when we lost Mark. Yesterday, the 13th was the 10th was the day that he passed away, which was on Saturday, and you and I were chatting, and boy, we sure miss him. I remember you came to California many times when he was here, and you came also out to Tucson many times after he moved here. He was certainly a great friend of ours, and we certainly miss him. I was speaking to Paula. She's doing okay and everything. But anyway, I have a question about the Federal Reserve. Now, you follow the Fed, what they're doing, and they're still pumping money like crazy. Do you see any end to this, or is it just going to pump it till, there's no more money anywhere and there's no more paper to print it on? What do you think is going to happen?
Well, they pumped a ton of money. The problem is they've got to figure out how to get the velocity of the money, the multiplier effect of the money. Once they get that going, we'll have inflation like you wouldn't believe. But we like British Petroleum on Monday's report that comes up today is talking about how we may never see carbon, the energy markets, the carbon fuels at peak COVID prices. I mean, usage again. That usage will never come back to what it was because people have changed in the way they're staying at home. They're not traveling. I mean, that's a huge statement from what I would consider a very well-informed source, British Petroleum. That we may never see that kind of consumption again. That's the world's changing, but they need that multiplier effect, and they need people to spend, and that's going to be hard to do. It's going to be hard to do this winter, and hopefully by spring we have some vaccines and some therapies, and we can get life back to more normal than what it is right now.
Well, why do we still have gasoline at the pump of $2.20? How can that happen with, that doesn't make any sense, supply demand, that if they're not using it as much, shouldn't prices be going down, and yet they're going up?
Well, some cases things are going up because there's so much money, and it's just trying to find a home. Okay, you print all this money, then you got all this money sitting there, and you don't want it to just sit there. You got to try and find a home. So people are, putting it in things that make no sense. I mean, you look at the Robinhood traders and some of the things that they were buying here 6 weeks ago that were going bankrupt. I mean, there's a lot of cash out there. People are looking for homes. They're looking for safety. They're looking for some kind of return, but definitely looking for their money to be returned. And they're throwing money at everything and anything. Yeah. There are more deals going on now because of the valuations are so high on these equities, yet there's so much cash that somebody else wants to get in. It's crazy time. And then on top of that, we have silly season for the next 7 weeks before we get this election over with.
Oh, there's an election coming.
Yeah.
Oh, interesting.
And so you won't be able to stand watching the TV because there'll be so many advertisements.
Yeah, I couldn't do that. I saw the football was being played this weekend, and I didn't spend any time at all watching it. I didn't. In fact, the only score that I was watching was the Rams and the Cowboys, and I never even found out who won the game. So I've lost total interest in football, basketball, baseball, because when they start kneeling, I don't go for that kind of stuff. As you well know, I'm an old country boy from Terre Haute, Indiana, and I'm going to stay that way till the very end. That's for sure. Anyway, Rich, we want to thank you for being with us today. And anything you'd like to impart here to give us some advice?
I'll add one thing. I was talking before I came on in chicken coop. I was thinking of something I had to shovel out of the chicken coop, but your associate thought of a chicken house, chicken coop.
Yeah.
You have a good day.
Hey, thanks a lot, Rich. Thanks for joining us, folks. Rich Anderson Capital Management out of Minneapolis, Minnesota, where they still have a police force, but it's marginal. So let's keep in mind that that's what we're watching here. Okay, here get on here 1 second here. The old beeper just went off in the old corral here. Want to keep an eye on something here. We just hit 11,297 in the NASDAQ. We're smoking there, 33.78 in the S&P, so we're still going up. Bonds are still high at 76.22. That would have been my sale for the day, selling them at 77 that's it. The natural gas, folks, just stay with it. You know, we got to wait for a pattern that we can get. Hey, we're going to take a break. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to bring to your attention that Basil Chapman's going to be having his all-day webinar here on the 16th between 9 a.m. and 4:30 p.m. Folks, one of the reasons why I do this for TFNN is because the folks that Tom has put together is really a great group of really nice guys that really try to give you some good information, and none any better than Basil Chapman. He's really got some great stuff. Just his historical stuff is worth the price of the webinar, plus the other things that you get. I mean, it's just really worth it. So if you have a chance, treat yourself to that all-day session. It's part 2, which is really good, but he's going to cover some great stuff. And when you get somebody on there for 8 hours, I can't do 8 hours anymore, folks. I can only do 5, but Basil's able to do that, and it's really great. It's technical tools based on the Chapman wave methodology. It's going to be an all-day course, and I think you'll really enjoy it. And in fact, I know you'll enjoy it. So if you got a minute to do that, it'll be archived if you don't have a chance to do it live. So it's something I think that will be very, very important to take a look at. So let's remind ourselves that that's going to be Wednesday, the 16th at 9 a.m. Try to remember to do that. Okay, folks, let me take a look here quickly at what these markets are doing. We've been as high as 3376 or 77 in the S&P. We did hit 11,300. That's a 382 retracement of the last move. But the most important number of the day, folks, was 1968 in the December gold. That's a 78% retracement. If we can get that market above there, it's got legs to go a whole lot higher. If we can see it at 1970, 1971, it could have a nice move. We're trading at 237 in the natural gas. Again, we'll spank our little bit of our stuffed animal here, kick our little dog, and we'll look at it again when we make an ABCD pattern. You know, on the downside, we'll try, an ABCD on the downside, maybe at around 233 or something like that in the next day or so, but we won't touch it today, that's for sure. Okay, let's keep in mind that that's what's going on here, but to try to go to Basil's show, folks, it's really worth it. It's I even pop in there too, so it's really good stuff. 877-927-6648, and may God bless.